All right, we are live. It is Thursday. It is late afternoon. It's been a tough day. If I wasn't on a discipline kick right now, I would for sure have some booze in my hand right now. Appraisal's coming in low. Refrigerator went out last night. Been in one of those days. But it is what it is. We also got a terrible inflation number to boot. But I kind of thought it would be worse. We know the real number is worse. You see, if you calculate the inflation number based on the old formula that we're comparing it to, see, we're saying this is the most in 40 years. So you go back 40 years, the numbers that they were using then, what they were actually counting in inflation, we'd be above 15%. They continue to move the goalposts on this for political reasons, obviously. And so we have a 7.9%. I shouldn't say political, it's politics, right? It's politics. They don't want people to know how bad things are when they're bad because they don't think we can handle it. No matter how much we beg for the truth, we're not going to get it. We're going to get the watered down version of it, and that's what this is, 7.9%. So big question is this bad for real estate? At what point does inflation become bad for real estate? This is kind of the question we've been getting. Is I've been talking about this for almost exactly a year now, that we had hyperinflation. Remember, I used that word, hyperinflation, being very specific, a year ago. And now everyone is starting to really see and realize it. You're going to see a lot of the media and stuff like that blaming this on what's going on in Russia. Definitely not true. It's been here for a while, long before the Russia thing. And it's something that doesn't happen quickly. It just doesn't happen quickly. It takes a long time. But does it hurt real estate? People have heard me on this channel many times say inflation is good for real estate. You want to own real estate. Real estate is an inflation hedge. Most hard assets are. A lot of people buy gold for the same reason, for hedge inflation. And gold is actually up, I think, still above $2,000 per ounce. So congrats to everybody who loves gold. Shiny yellow rock, very expensive now. But the the question is, where do we reach a point where inflation is bad? And several dominoes have to get knocked down before we get there. By the way, we're going to talk about interest rates today. I've got that all lined up. Derrick Evans here, NMLS 155010. Call, text me if you want to buy, refi, get a quote, get a better deal than the one you've been quoted. You can email me too. Let's get this out of here. Let's get me out of here. Let's dive into this. Bunch of stuff here. Really interesting things, actually. It's a domino effect. So inflation is bad for bonds. We've covered that in great detail. I believe there's a bond market collapse unfolding right now. And we lost a key support level today on the mortgage bond side of things. Really, really, really brutal to see this, to be honest. And I haven't been greedy about this. I mean, we took advantage. When we got this spike right here, we locked a bunch of rates, right? We talked about that on this channel. I predicted that this would probably head this direction. I was just hoping that this support right here would hold. Was all I wanted to see. Just stay in this channel. Let's stay above 100. And you can see now we're under 99.78. Got another lock alert today. And unfortunately, this is we're probably going to head lower. Probably be talking about a 3.5% coupon. This is the 3% coupon right here. We're probably going to be talking about the 3.5% coupon tomorrow. And rates continue to deteriorate here, as they should. These bonds aren't worth a lot. And so as rates go up and up and up and up, at what point do higher rates hurt real estate? Is it when rates are I quoted a 5-something% today, by the way. That's the first time I've seen that. It's a low credit conventional deal with low money down. It's kind of the worst case scenario for interest rate, but it began with a 5. How about that? Was it 5s? Is it 6s? Is it 7s? 8s? At what point do interest rates going up affect real estate values? It's got to at some point. At some point, it does have to. How high is that? We don't know. But I will say this. We have two things working very well for real estate right now. Number one is extreme lack of supply. The higher rates go, the harder that's going to become to fulfill. Higher rates go, the more difficult it is for people who are selling and buying a home for that to make sense. So I think that actually is going to constrain supply even further. Also, when you have a situation where the market has told us explicitly that when there is problems, when there is drama, COVID-19, when that hit and the market showed us that real estate was a safe haven for big money, and then we get information like this, kaboom. I mean, have you seen this? Oh my goodness. Household wealth, highest ever. Pretty wild, huh? $150.3 trillion. A lot of money. So there's a lot of money out there. I mean, just ask yourself, like, what are you going to do with if you were sitting on a bunch of money, what would you do with it? Oh, I would just sit on it. Are you sure? Because you're losing 7.9% by doing that. What do you do with it? What's the safest thing to do? The smartest thing to do is exactly what those big Wall Street firms did after the collapse, after the real estate crash. They no longer believed in the bond guys. They went around them and they started buying real estate themselves directly because they want to collect that rent. They don't want to wait for a bond payment. They don't want to have a middleman. They don't want the intermediate risk. They went around it. And when you buy a house, when you buy real estate, that's what you're doing. Why buy a mortgage bond? You can buy the actual house, own it, receive the tax benefits directly, collect the rent directly. So household wealth has gone up a lot. So long story short, there's tons of money out there. There really isn't a safe haven asset. What's a safe haven asset these days? It used to be gold. Is it still gold? I don't know. Gold's up like, I think 12% in the last 10 years. Maybe that's the new safe haven asset. I don't know. I don't think so. If savings accounts start paying 3, 4, 5%, will people take money away from these things? Will people sell their real estate to stick their money in a savings account or a CD that's paying 3, 4, 5%? I don't think so. Even here in San Diego, like you have a bad cap rate, you're getting 4 or 5% plus tax advantages and appreciation opportunity. Yeah, I don't think so. I can't find a reason why there would be an exodus for real estate. I'm looking for it. Trust me, I am. I mean, I was in the ground floor, in the trenches for that last crash. I took it on the chin. I took it on all chins. I was in the mortgage industry, running another business, day trading futures. Trust me, I got shellacked real bad. So I'm looking for the catalyst. I'm looking for the reason. How does this hurt real estate? We got the CPI number. Is it Russia? Remember when everyone was telling you about China, Evergrande, and I told you not to worry about it? I'm sorry. I know there's some people who are still saying that follow this channel. I apologize. I'm not attacking you, but I told you so. If there was something that was going to implode there, it wasn't going to make it here. Even though there were some firms who were invested there, China keeps things very close to the vest. There's no real way to get too invested in China. Do you know that? They don't want you. They don't want you. They don't want your money. But it's the kind of place where we see it here in San Diego, where when people accumulate a lot of money in China, they will buy properties here cash, sight unseen, because they believe the money is safer in that kind of situation than keeping it in their bank account in China. So it's not, I'm not envious of it in any way. But I told you the Evergrande thing was overblown. PIMCO has some losses here over exposure to $1 billion in Russian debt. Uh-oh. Here's something. Okay, here's a new hole for me to go down to try to figure out, is this going to be the thing that tips stuff over? I still don't think there's anything worse than what's happening in bonds. Yeah, you might have a fund here or there that's got some serious exposure, to the Russian markets, but not that many. I mean, who's really that invested in Russia? Is there a lot of growth going on over there? No. These guys were just giving credit out to probably really good credit risks. It's not like they made $1 billion in bad debt. There's probably good debt. But Russia is basically getting cut off right now. Russia is being cut off. Russia is the trust fund kid who's been cut off. You're done. And so it may cause some problems. I haven't heard not enough buzz about this to think that this is anything significant, but let's say it is. Let's say there's some funds, some Wall Street firms, some banks that have a lot of exposure to Russia and they get smoked. Does that really spill over to real estate? No, it'll spill over to stock market, which I've been warning you about that for quite some time. And now you're seeing, although there was dip buying today, which kept this from being really ugly, we're still seeing mostly down action, lots of volatility. Volatility, down action. Volatility, down action. NASDAQ puts gained a little ground today, and oil did too, actually, even though it shows up here. And this switches over. That's the problem. So this is actually down a couple bucks, but it is what it is. Not sure what's going to happen there because remember, like if the economy, and this is what's so hard because we use oil as a gauge to see like how is the economy doing. Oil is usually a really good gauge for that. If there's strong demand for oil, that usually means that stuff's happening. The economy's moving. It's clicking. It's running. If there's low demand and the price drops due to increase in supply, then that usually shows kind of a softening worldwide economy. Worldwide economy, this is the best indicator. It's very difficult to use it right now because of the fact that Russia is being cut off from the world. And they do participate. They're the third biggest oil player in the game. It's us, Saudi Arabia, and Russia. 1, 2, 3, just like that. So for them to sort of be cut off, I don't know if you saw this, I should have pulled the story up, but Shell bought a bunch of oil from Russia that no one else was going to buy, and they're under extreme criticism for them. I wonder what discount they got. Can you imagine? What discount do you get for that black market oil? I would love to know the answer. I don't know. I would love to know what the answer to that is. Gold here hanging around 2,000. Bitcoin just right back to where it was before the executive order. Lost all those gains. Boo. But Bitcoin has got some soul searching to do here. I'm not going to talk about it a ton today, but it's just basically, it's just ranging. It's just range bound. That's really all that's going on. We won't go into that too much. But so I don't think Russian debt is the issue. I think the stock market may come in, but if the stock market gets crushed, is that going to cause people to sell real estate? What is it that is going to bring more houses to the market? That is the question we're trying to figure out if the real estate market's going to get hit by this. We could see higher interest rates. If we saw much higher interest rates and more inventory, maybe that would do something to slow it. But right now it is a speed train and you got to get on that train or get off the tracks. I put this one up here today because I want everyone to know this. This has nothing to do with what I'm talking about. This is one of the things I've been discussing since I started my radio show like 15 years ago. Unbelievable the stuff that happens in corporate America. The Moderna CEO, his golden parachute's worth almost $1 billion. You know what a golden parachute is? That's when you retire or you leave or you get told to leave and they pay you a massive amount of money on the way out the door. That's the biggest one I've ever seen. This was supposed to be just under 10 million prior to the pandemic. Because of the pandemic, his golden parachute went from 10 million, or let's call it 9 million and change, to 900 million and change. Isn't that something? 100x. Follow the money, folks. Read this. I will say this from the executive order yesterday regarding crypto. It does pose 401k risk. There's no question about that. I Trust Capital. There's some other places out there where people are investing in crypto in their retirement accounts. I told you yesterday I have huge exposure to GBTC in my retirement accounts. I understand why they're worried about people, but to act like it's any different than stocks, people go in and blow up their retirement accounts and stocks all the time and no one's talking about it at all. Do you know how many people blow up, absolutely destroy, just completely their retirement accounts with stocks all the time, every day? So I want to see that being treated equally. Oh, I highly suggest you watch this too. So this guy is Ripple CEO, and he's basically, and mind you, Ripple has been in a lawsuit with the SEC for quite some time now. So he said this order could end this fragmented, issue with U.S. regulations. And so it could be a very good thing. This is what I was saying yesterday. A different take on it from someone who's really neck deep in it. If you want to check that out, go ahead. But overall here, team, we are just looking at a situation where houses are getting harder to buy. There's less and less people who want to sell, right? Why would you want to sell when prices are going up so much and seemingly never ending? We've got a clear downtrend here in mortgage bonds, which is causing rates to go up. And I don't see this repairing anytime soon, unfortunately. I don't see a catalyst for this to get better. So expect rates to continue to get worse. And I would definitely expect the real estate market to stay at least warm. More than lukewarm, at least warm. Warm to hot is our expectation. I'm telling you, I've got so many well-qualified buyers who are looking at the market every single day, who are going and looking at homes every single weekend, who are writing offers every single weekend. They can't get an offer accepted. So prepare yourself for a marathon, prepare yourself for 20, 30 offers, prepare yourself appropriately for this market if you want to buy real estate in it, because that's just what it's going to take. And until we see something change here on a very macro level, you have to be bullish for real estate. If you're looking to refinance, I've been talking to a lot of people lately about that. Give me a call. Let's get you a quote. No fees. Don't pay any fees. Get a low rate and get good customer service. You shouldn't have to sacrifice anything. That's all I'm preaching here. Give me a call. Shoot me a text. If you want to buy a refi, shoot me an email. Guys, have a great day, and I will be in touch with you again soon.